Well, guys, the stock market is tanking right now, and so is my portfolio. Currently sitting at a value of $50,077.14. And that is just mind-blowing because I figured my portfolio would continue to grow and not drop so much. I am down $2,015.22 in just the last week. And I did earn $158.46 in dividends, but still, that is insane how much money my portfolio has gone down. Year to date, I am down $3,240.05 with earned dividends of $1,454.93. And then all time, guys, I swear 2 weeks ago, I was in the green $72. And now my portfolio is down $2,338.92. However, all time I've earned $5,752.50 in dividends. So that's pretty awesome. And, in times like these, I'm not worried. I don't plan on selling any stocks, although I do want to review some of my worst performing stocks. This is going to be pretty interesting. And one thing I wanted to say, this is in times like this is why you want to have your principles straight and understand your risk tolerance and what your goals are for the future with investing. And as you guys can see, SCHD, it jumped up to 30.2%, which is a slight increase. And of course, my goal is to make SCHD the majority of my portfolio, 65%. Slowly but surely, we will get there. And SCHD is the core of my portfolio. And that's why I feel very secure with my portfolio, even though I've gone down so much money and so much value. Even if I look at SCHD, my average share price is $73.30. Current price is $70.63. So I'm down almost $3 on the stock, although or ETF, although I'm not worried. It's SCHD. They will bounce back. And what I wanted to show you is one of my individual stocks that is just performing the worst. So I have it set to my gains at the top and my biggest losses at the bottom. So all time we'll start with Avgo. They're up almost 40% all time. Most of that is market gain, capital appreciation. But this is a stock I've only owned since February 3rd, and it's my best performing stock of all time, which is pretty insane to think about that because I've owned Microsoft for many years. In fact, we can look at this. Oh, so that's lame. So it only shows me owning Microsoft since January 25th of 2023. And that's because I created a new pie, the individual stocks pie, and that deleted all of my prior data. But so if I didn't have this pie, I imagine Microsoft would be my top performing stock. But what I wanted to show you guys was my worst performing stock, which is Dollar General. Says I'm down 56.4%. If I go over here to Google Finance, it says Dollar General is down 57.12%. So I believe it's the dividends that are bringing me up on General, which I've earned $2.6 in dividends and I've lost $264.83. This is absolutely the worst stock I've ever owned. And I've owned Nusi, which dropped almost 40% or more since I owned it. I own Verizon, which has always been in the red for me. And I've also owned stocks like XYLD, QYLD. And so I'm surprised, shocked that Dollar General is so bad. And so this one is true. I actually did buy Dollar General on January 25th of this year because that was one of the new stocks I bought in this pie, the individual stocks pie. And so I want to show you guys what I did. I'm not going to sell Dollar General, even though now that I look back, I probably should have never bought this stock. And that's mainly because it's a retail company, kind of like a grocery store. but on the very low end. They've been having a lot of difficulties with staffing, closing down stores, and theft. So that's what's driving down their stock price. Whereas you have a company like Costco that is performing really well. And even if we go to year to date, let's see. All right, year to date, Costco has still performed pretty well. Oh, I guess it's the same data since I created this pie. But either way, Costco is the premier grocery store. Then I should have just stuck with Costco the whole time. But what I ended up doing is, as you can see, Dollar General is 1% of my individual stocks portfolio or pie. And Dollar General used to be 4%, but I decided to drop it to 1%. And I increased Texas Instruments, Home Depot, and the Southern Company from 4% to 5%. So I like those companies more. And so ultimately, Dollar General is about a 0.5% of my portfolio's total value. So since that's the case, I'm not too worried about Dollar General continuing to drop. Hopefully one day, who knows, 10 years, they can be back in the green. But if we go back to this chart, we can see Verizon, which is used to be my worst stock. As you can see, my average share price is $58.06, and the current price is $32.99. So I do not imagine that Verizon would ever return to $58, but we'll see. Now, a couple other things I want to look at in my portfolio. You can see my activity feed. And if we go back to the previous week, I received $13.09 from Duke. I deposited $25 and I had one buy of $61.74 into SCHD. And then on the September 22nd, I received $1.86 from Waste Management. And then on September 25th, I received my largest dividend ever, which was from SCHD of $138.57, which is pretty awesome. And I also deposited $25. And it looks like I had two buys, $39.94 of SCHD, then $138.58 of SCHD. And if I go back to SCHD, just to look at how many shares I have, currently have the 214.23 shares. Of course, once again, the price is $70.63. And then it's got a nice dividend yield, 3.66%, which I'm going to continue to buy SCHD. But I would also like to go to my real estate pie and look at O Realty. This is a stock, it's down a lot, especially all time, $500 down, earned dividends at $250.37. I used to have $2,000 in realty income, actually even more than that. But anyways, it's at $1,886.01, 37.52 shares, an average price of $63.49. The current price is $50.26, and they have a dividend yield of 5.88%. Now, I know real estate struggles, especially with these high interest rates, but I do believe that O Realty is one of the better REITs to own. So I might think about snagging up this awesome dividend yield of 5.88%. That is very tempting. Then if we also look at my real estate pie, you can see one of my worst real estate stocks, American Tower Corporation. And I figured this company was just an absolute solid buy because of their market, but even they're tanking, down $477.73. And I've earned $28.17 since I bought this stock. And I bought them on January 20th, put almost $2,000 in. And as you can see, I have 9 shares, average price of $215.98, and it's dropped a lot to $162.91. Once again, I'm still not worried about this stock. I think eventually over time they will come back. And we have a nice dividend yield at 3.72%. So this might be a stock that I think about putting more money into. And maybe I'll start putting a little bit of money into real estate, but I'll think about it. I really do want to get SCHD up to its value of 65% of my portfolio. So now I want to go to my dividend growth portfolio, and I finally surpassed the year of 2021 of $1,421.38. And for the year of 2023, I have $1,498.20, almost $1,500. And I'm a little under $30 from beating June, the last third month of the quarter. So I do believe I will get there because I've had higher dividends in the month of September than I had in June. Then as you can see, the 12-month average for my dividends is $124.85. And then my 3-month average for the third quarter is currently $140.27. I believe I'll round out about $150 for this quarter, which $150 a month is still pretty good, but it's not the almost $200 a month I earned in 2022. But that's just what happened after selling a lot of my monthly paying stocks like JEPI, NUSI, XYLD, BST. So we're finally starting to see what my portfolio actually generates in dividend income. And so guys, thank you for watching this video, and I will see you in the next one.